$3 trillion, or close to $3 trillion, was wiped off the global markets this morning, and the markets are in a bit of a panic right now. But this is begging the bigger question: is the AI bubble finally bursting? You guys know my view on it. I don't know if it's a confirmed fact that that's where we are, but there is some concerns happening. And the real question, I think, is where is that trillions of capital going to go when the investors finally realize that, hey, maybe it's not safe where it is? So to get to the bottom of this, I do have to start in South Korea. So I know you're like, why are we even talking about South Korea? Well, this is where the global market meltdown started. And I do have my boy Chris. So Chris back in the building.
What's up, everyone?
Gonna be a good show. All right, guys. So let's start here. Shouts out to Bull Theory IO on Twitter and bloodbath in Asian markets. So over 800 billion wiped out from the Asian stock markets in just a few hours amid a massive tech stock sell-off. South Korea's Kospi is down 8.2%. Actually, I think it went down about 12%. They literally had to do the circuit breakers and stop trading. Japan's Nikkei is also down. Taiwan stock market is also down. And going further, we saw this morning that at the market opened, wait, where'd it go? S&P 500 itself wiped off 1.4 trillion. It's a bloodbath out there for stocks. But Dow Jones actually up a little bit. So that's kind of interesting. But again, you see the markets to really explain what is going on right now in South Korea. A little bit of a breakdown of what is happening. We're seeing gold's down, silver's down, tech stocks are down, equities are down. And they're all going down at the same time, like a force selling across all the markets. And again, to explain this, it is starting with an AI semiconductor deleveraging. So this is what happened. South Korea leverage ETF crisis. Here's on Yahoo Finance, sparks global chip sell-off. So South Korea's top financial regulator expressed regret Monday over approving a batch of high-leverage single-stock ETFs last month, setting off a violent sell-off in memory chip shares that spread from Seoul and Hong Kong into U.S. pre-market trading. It actually spilled into the actual market open. So Samsung Electrics fell 12.31%. SK Hynix dropped 12.47%, with both stocks opening sharply higher before collapsing through the session. The magnitude of the move helped push the Kospi down roughly 10% from its recent record high, triggering a market-wide circuit breaker trading halt. And then, of course, NASDAQ's down 2%. I think S&P 500 was down around 3%. Putting the index on pace to shed more than $1 trillion. It's in fact now, as of market opening, 2-3 hours since the market opened, it's past $1 trillion. Again, the catalyst was a Monday briefing from the Financial Supervisory Service Governor Lee Chan-jin, who said he wishes he had done more to block the late May launch of 16 single stock leverage ETFs tracking Samsung and SK Hynix. Those funds held combined assets of $3 billion at launch, but have since swelled to roughly 14 trillion won, or 9.1 billion, with approximately 92% of holders being retail investors. These are high-risk products. Despite consumer warning, trading hasn't cooled. All right, so breaking this down a little bit. We're seeing that a lot of Korean investors are buying into the AI hype right now. And obviously there has been, it's been a very hot market. As we know in the US, AI stocks, the SpaceX IPO, and I do have a bit of a little update on the SpaceX IPO, which does kind of come together with this whole story, that's the shiny trade right now. Everyone is chasing the AI hype bubble. And it looks as if, again, big if, what we're seeing, the deleveraging that we're watching right now in South Korea is spreading to everyone else. So the South Korean investors, they are known for being, extreme gamblers. I actually have a good zero hedge tweet here, and it goes, as a reminder, Korean gamblers have never been more levered than they are right now. Record leverage ETFs. Everyone is chasing the AI hype bubble. Now, we've been covering this for a couple of weeks that all the capital that's been leaving Bitcoin has been chasing the AI bubble. And now what we're seeing, at least starting again, this could not necessarily spill over into US AI stocks, but we're seeing what potentially could be the start of this capital rotation out of AI, deleveraging out of AI, because everyone's kind of maybe waking up to the fact that everything's running a little too hot, that maybe this AI bubble is in fact a bubble. And now we're seeing our markets are starting to feel some pain from this. So it isn't just a single thing happening, an isolated event in South Korea, because everyone was chasing the AI chip stocks, this AI memory boom, and now it's being walked back. And again, at the same time, as I was telling you, we are seeing that SpaceX is also having a little bit of trouble. So the SpaceX IPO, which in fact I told you was probably going to happen, I think, what was it, maybe Friday or Monday, I was getting a little doubtful on my conviction that the SpaceX IPO would in fact go down. It ripped up. Well, as of this morning, actually before this morning, it did rebound a little bit, but SpaceX did like a complete round trip to its opening IPO price. And again, the reason this is all connected is because we don't know how many retail investors in Korea also bought into the SpaceX IPO. SpaceX and Tesla are extremely popular in Korean markets. They're, the retail investors are buying into the hype. It is they're both one of like the top 5 Korean stocks right now. And any volatility in the SpaceX IPO, any volatility in the AI bubble, well, I guess maybe not bubble. I think it's a hype bubble, but it's going to have an impact. And we're seeing South Korea's wrecked. Asian markets in general are pretty wrecked. It spilled into the U.S. markets this morning, and this is why we're seeing this correction that we saw this morning. Now, in numbers, it's really not that crazy, especially if you're a Bitcoiner. It's like S&P 500's down like 3, NASDAQ 100's down about like 4. Maybe it rebounded before I started the show. Dow Jones surprisingly up. So in context to the numbers that we're used to, it's like, okay, nothing real, like 3%. What are we really worried about? But when it comes to equities, that's actually a huge move. Now, on top of this AI speculation and ETFs blowing up in Korea, part of this reason is this other story that just happened, which is Korean lawmakers are pushing for an unrealized tax gain. And this is also spooking the Korean markets. Obviously, they got the circuit breaker last night. Well, I guess this morning. And the Korean markets they're kind of cooked. The retail investors over there are kind of cooked. Everyone is chasing this AI hype bubble. Everyone is chasing the shiny new thing in the room. And this does have a corollary, a parallel to what we're seeing in the U.S., which is, of course, everyone is chasing, whether it was the SpaceX IPO, whether they're chasing the AI semiconductor stocks, whether they're chasing the AI IPOs that are coming up down the pipeline. We're starting to see that, hey, a lot of the stuff we're seeing might be unsustainable. Now, I know I'm talking about AI right now, and we're talking about global markets, and you're like, okay, what does this really have to do with Bitcoin? Well, we also, in fact, got a sell-off this morning. I will pull up the chart. It's not a big sell-off, but we did rebound down to about 62K. I did have a trend line here. It kind of got invalidated. Sorry, guys. Something's up, a booger or something. But that's too much information. So here we go. Sorry, I didn't pull up the chart. We, in fact, also saw a sell-off. So if you're looking at Bitcoin right now and you're wondering, like, why are we selling off right now? Nothing's happening in the Bitcoin market. It is, in fact, because of what's going on in the global markets. Because what we saw happen in the Korean stock market, it is spilling into the U.S. stocks and, of course, into Bitcoin as well. Though, in comparison, it does look as if Bitcoin is still relatively strong. I would consider the move that we saw this morning in the Bitcoin price like it's still pretty strong, guys. And I know I will talk about where we currently are on the market, because we do have some interesting new on-chain metrics right now. But Bitcoin's holding up pretty good in the face of this macro geopolitical skirmishes that we're seeing around. And also, guys, I don't know if you know, but like the straits closed again. Iran basically got everything they wanted. They're also now going to be able to settle oil sales in dollars now. So it seems like the sanctions off on Iran. And I had a theory. I wasn't even going to bring it up today, but I was talking about this one. I'm like, oh, it almost looks like Iran used the whole get paid in Bitcoin fees for the toll as a geopolitical chess move. As like, hey, you want to cut us off? Well, we're going to get paid in Bitcoin. And now the U.S., because if you guys know, the U.S. is running out of oil reserves. And so this is why we're kind of having to pull back from the war in the Middle East. And this is why we're trying to get a ceasefire right now. And now Iran is getting everything they want. They're like, hey, actually, we're going to get paid in dollars. So a lot of crazy stuff going on in global markets right now. But it is all kind of underwritten by the craze that we've seen in the AI cycle. We've seen a lot of hype going into recent IPOs, into AI stocks. Everyone is chasing the golden glitter that is AI and have completely forgotten about Bitcoin. Now, at that same time, as we're seeing, people are starting to feel the pain. People are starting to look at what they think is going to basically get them out of generational boredom. And they're realizing, wait, maybe this isn't the trade I thought it was. Now, we've been talking about this for a long time, that eventually we will get to the point where people realize that Bitcoin is the exit. Bitcoin is the safety boat. Are we there yet? I don't think the market has fully woken up to the fact that Bitcoin is the safe haven yet. People are still chasing the fiat gains. People are still chasing the new bubble. People are chasing the new shiny thing on the block. And as we know, retail, or quote, dumb money, isn't necessarily the best thing to be following in terms of where the real gains are going to come from. But where we currently stand, Bitcoin is still completely forgotten. In my opinion, Bitcoin is completely undervalued right now in the face of all the uncertainty we're seeing in the stock markets and equities, in the geopolitical mess that we find ourselves in. But will we finally get to the point? And I think it's going to happen probably sooner than later. And by that, I mean, at some point this year, we will see everyone start to wake up to potentially being in an AI hype bubble. The AI bubble, it's like, from the numbers I'm seeing, it seems like it's even more overvalued than the .com bubble. Now, are we saying, or have I been saying, that AI is going to go away? No, but it does look like we are starting to see a very hot market. We're starting to see a lot of the AI stocks, even you could argue the traditional equities and indexes, being completely overvalued. And most people are missing the forest from the trees. That is not necessarily, in fact, that your stocks are going up. It's that the money is becoming even cheaper. It's becoming even more devalued. There's more paper chasing these stocks and equities, more paper, more liquidity chasing these bubbles right now. And it really does feel as if it's a musical chairs scenario right now. When will the music stop is the big question. Is it stopping right now? I don't think it's fully stopped, but you're starting to see that maybe the music is slowing down and people are panicking. So it's not a Bitcoin problem. I think a lot of the stuff we've been seeing recently hasn't been a Bitcoin problem itself. It's really been just what's going on in the macro markets. Everything that has happened as of basically the start of this year hasn't been a fundamental problem, like a network level effect of Bitcoin. It's really how the institutional investors are looking at the broader markets and where they're putting their capital. So if everyone has been chasing these AI stocks, and now we're starting to see that they might be waking up to the fact that things are overvalued, will we be seeing the capital rotation from AI into Bitcoin soon? The reverse effect of what we saw in the recent months of all the capital leaving Bitcoin going into the AI IPO, SpaceX IPO and stuff. So interesting times in the global market. So if you're sitting here wondering, like, why is Bitcoin cheaper? You're panicking about a Bitcoin sell-off. again, it has nothing to do with Bitcoin. It has to do with what's going on in the macro markets. It all has to do with what's going on in the broader, bigger traditional markets right now. And Bitcoin's just kind of sitting here at 62K. I think the price, if it was a human right now, it's getting bored and it's like lonesome. It's like, guys, did you forget about me? I'm not going away yet. But again, what we're seeing right now has nothing to do with Bitcoin. It has a lot to do with the AI bubble. Now, if this is the start of a bubble bursting, we all know where the safe haven is. We all know eventually where that capital will find its way to, and that is, of course, Bitcoin. So anyways, I rambled long enough. Chris, good to have you back.
Good to be back.
I'm sure you will give a 125 IQ version of what I just said. So did you see this Korea news this morning? What's your thoughts on maybe the global landscape right now, the macro landscape, and Bitcoin's place in it? So you haven't been on in a while, man. So
no, I haven't been
what's
long.
your take on that? Actually, you'll actually have fresh takes on today's show because you've pulled back a little bit. So what's your overall read right now?
I didn't see the sell-off of the news of the Asian market, so this is kind of news to me, but I think it's all interconnected. We've seen in the last at least 20, 25 years, the effect of globalization. Obviously, we've seen the prices of a lot of things that are commoditized, whether it's, tablets, cars, phones, things like that, things that are not affected by government subsidies come down in price. Your TV is way better than it was 20 years ago and it's cheaper, but things that are subsidized by the government, such as healthcare, college education, just to name a few, housing, that are basically, the US has the best form of wealth transfer ever from the world by just giving 30-year fixed rate mortgages that the US government backs. So that is a benefit that Americans get compared to the rest of the world. But we've seen in this globalization process that basically US wages have stagnated, where wages in the world have slightly crept up. But when they're making a few dollars a day and it doubles, that's still much, much cheaper compared to American workers. We've seen this through both Democrat and Republican presidents, going back all the way as far as Clinton. It could be argued even further back as far as Reagan as well. But basically, we've seen the effect of globalization, that a lot of things have gotten cheaper where everything else gets more expensive. The point that I'm tying in here is, obviously, we've seen with things come to a boiling point, obviously the hot war in Ukraine and Russia having an effect on global energy prices and markets. And then obviously this latest conflict in February with Iran, we've seen the Strait of Hormuz cut down. And obviously, the 30% of the oil reserves that come through there are basically being blocked or not being shipped out because they're, holding the strait hostage. I'm not here and there nor there to, talk on the geopolitical aspects of, who's right or who's wrong in that situation. But when you're cutting the supply 30% of global markets, we've seen gas prices rise as high as 50% in just a few months. Obviously, they've cooled down and they've come back down a little bit. The US and Iran trying to do a peace negotiation. It seemed like oil was getting out, then they closed it down again. Maybe they'll open back up soon. But we've seen a little bit of reprieve in the gas markets. But since everything is globalized and interconnected, it affects things. So with gas or energy prices going up 50%, like it was around 280, 270, 290. I'm not speaking for the California folks. Your gas is way more expensive, or even people in Europe, it's way more expensive and it's based in liters. I apologize to you guys, but at least here where I am, it was about $2.80 probably in January. And then it's leapt up all the way up to like 440, 450. Obviously, I know it's varying in different parts of the United States, but that's kind of what I've seen, a 50% increase in the area that I'm living. We've come down, it's only 30% higher. My point being, tying this all in. So obviously Bitcoin, we know, is down about 40% on the year chart. The S&P 500 on the year-to-date chart's up about 7%, but on a year-over-year or 1 year mark, it's about 22%. Dow Jones is very similar, 7% for year-to-date, with 21% for year-over-year. Gold was up about 22% on the year chart. Silver was up way higher at 71% on the year. And basically my point being is, when you're basically, everyone's screaming for yield. And when you think you're getting 22% on the S&P 500, the Dow Jones, like basically the benchmarks of industry over the last year, but then when you have gas and oil prices go up 50%, that means that you lost about 30% in purchasing power. And that's excluding the downstream effects that we still haven't seen. Housing pricing still going up, or housing prices you think would have fallen with all of this. They've remained pretty steady at where they are. They've been slowly creeping down 10, 15, 20%. But when the cost of energy is up 50%, that doesn't even offset the cost of like things staying the same or even slightly going down. So basically everyone right now is thirsting for yield. And you think when you're making 22% on your money, you're like, oh my God, that's a great year. We're having a fantastic year. I mean, in the COVID years, what was it, 31% in the COVID year or 33%? You're like, I just sat on off a boat off the Hamptons and I made 33% of my year if I was an advisor for a hedge fund in 2020. But it just goes to show, kind of tying into your point, Opti, that basically our money is dying. It is, I don't know the point when it's officially dead, the dollar's dead, cash is trash. But at that point, even if you're getting 22% on your money and you're still falling behind, that's an issue with the underlying currency. It's an issue with the system. It's an issue with globalization. And, obviously us as Americans, we're feeling it. But you can think of even places like the Asian markets, Korea and Japan, they're starving for yield. And then it's kind of a flywheel effect as well. So if South Korea, Japan, and what was the last Asian market? Taiwan. So if their markets are starting to crash, what's the first thing you do if you're their finance minister? Well, we've got a whole bunch of this US debt right here. We need to sell off bonds. So then the bonds circle back into the US market. The bonds go down. The bond yields have to go up. So then the US government has to loan at higher rate. We're already $38 trillion in debt. So it's this whole flywheel effect of they're trying to protect their currency. They're trying to protect their markets. They sell off dollars or their bonds, not dollars. They sell off the bonds. The bonds go down in value, but the yield of new bonds has to go up. So then the markets of the US markets start tapering down. We've seen the Strait of Hormuz close. So it's up 50% year on year on gas. That's excluding diesel. But that means that in 6 months to a year's time, everything else has to be more expensive. But your salary didn't change if you're on a fixed rate salary, or if you didn't change jobs, and your stocks and your bonds are only up 22%. Now they've fallen 10%. You've lost money year over year if you did not get basically a 30% raise. Obviously, the people like Elon Musk are fine, with the SpaceX IPO and him becoming the first trillionaire. If you have assets and you have a lot of debt, you're in a great position. Or I don't want to say have a lot of debt. If you have a lot of debt that you can basically get written down through a company, or that is going to get paid off with money printing, you're in a great spot. If you're anyone else, you're really struggling right now. So we're just kind of seeing globalization and where it fails. We had a good 50-year run basically since 1971, but we're seeing the knock-on effects. We're seeing it fall apart. And I hate to be the guy to say this. I'm not advocating for violence. We do not advocate for violence on the show. But when things get too bad, you only expect there's either going to be a violent revolution or there's going to be death in the streets because of food, supply chain markets breaking down. And we've already seen those in 2020, in 2023, things that the market's kind of falling apart, and it messes with supply chains. If people can't get fertilizer because of the Strait of Hormuz being down, the food crop yield is going to go down next year. So then people are going to go hungry in the winter of this upcoming year. So it's just going to become it kind of adds, you're turning up the heat to the boiling water. And quite literally the world is the frog in the pot that's getting boiled slowly over time. So anyway, that was a long rant. I hope we can go anywhere from that, Opti.
Yeah, no, I mean, I think when you put it in terms of globalization, I think a lot of people do not really understand just how intertwined the world actually is. It's very easy to be, especially as an American, hey, we're probably the worst at this. I'll be upfront, but we usually just think that the only market that really affects us as Americans is the stock market, is what's going on in the US. And so it's super interesting when you see what happens in Korea. Their stock market blows up. Well, it didn't fully blow up yet, but hitting the circuit breaker overnight is okay, there's an issue there. You don't really connect the dots into the globalization aspect of it. It's the entire world is interconnected. And what happens over there, it's like the butterfly effect. You may not understand or even care about what's happening in the eastern part of the world, but what happens over there does in fact affect our economy. And we all know the yen carry trade has been unwinding. Bank of Japan is raising rates. Bank of Japan has basically been the venture capital central bank of the world. And now they're wait, actually, we might blow up if we don't start protecting our currency. And that affects our country. And a lot of people don't really understand the interdynamics of what happens over there in Japan, a tiny island country. If their central bank raises rates, they don't understand how that affects our economy and the US markets. And we're seeing this. It's did anyone yesterday even consider that Korean markets would even affect us today? We all know the Bitcoin kimchi premium, where it's okay, we go to bed, the Koreans are degenerate gamblers and they want Bitcoin gains. And we know if you've been in Bitcoin for a while, you know how that works. But no one was like, okay, yeah, if the Korean stock market blows up, like it's going to affect us. And this morning, we're all like Korean market experts because they're blowing up. They're all degenerate retail gamblers chasing the AI hype bubble, chasing SpaceX IPO. And now they're freaking cooked. They're about to get unrealized gains taxes on it. They're panicking. And now our markets are starting to melt down. It's like, oh, yeah, I forget that we are an interconnected global economy. And we're not, we don't get to live in isolation anymore. Everything is interconnected. And one last thing that I want to say before we move on. You know, the irony is not lost on me that the centralized ETF issuer is like, whoops, sorry, guys, we made a mistake. And everyone is like, oh, it's okay, guys. You know, the very people that are here to protect, quote, retail investors are like, actually, guys, I think we jumped the gun and we might have actually hurt investors. And like, it's okay, bro. Like, you know, what's a couple trillion between friends here? You know, your little mistakes blowing up the markets, but it's not really that big of a deal. And we're over here, the decentralized monetary network, just like, guys, I'm still here. You know, I'm still around, guys. I can actually fix this. And people are like, no. I don't care about Bitcoin. It's no longer the cool thing in the market. The gains are gone. I'm not going to be able to get any yield out of this Bitcoin just hodl. So I got to chase all this other stuff. And it really is a further confirmation of, again, I keep saying this, I'm a broken record, but it goes back to that Trump quote we just heard about, like, I think it was a month ago. He's like, the entire world's a casino. So until everyone understands that the entire world is a casino, you know, play stupid games, win stupid prizes. We are just going to continue to turn everything into a casino. Everyone is gambling. Everyone is chasing yield, as Chris was saying, because we all understand, at least subconsciously, that the money is absolutely trash. Now, maybe the US dollar is better than other fiat currencies, but it's still trash nonetheless. And this is why we're seeing that the gamblers in South Korea in the stock market is starting to affect the gamblers in the US in the stock market. And, you know, all markets are starting to melt down. So will we see the final capitulation? Is this finally the everything bubble popping? I don't think we are necessarily there yet, but it is starting to feel a little bit like the 2007 era, where you start to see the cracks in the system. And then in 6 months, 9 months is when you really see all the catastrophe that's going to follow. Now, if this Strait of Hormuz, you know, US-Iran conflict does start to figure itself out and it does get resolved here soon enough, there is still going to be some pain, but maybe we'll be able to stave off a lot of the real bad, like the depression-like pain, because you're starting to see them talk about that. They're like, yeah, maybe if we don't open up the Strait of Hormuz here soon, we might be in a recession, maybe a depression. It's like, we are getting to the point where there's not that many options left. And again, I don't want to be a doomer. You guys know me. I don't like to be a doomer necessarily on the show. I'm not here to propagate necessarily fear porn in the macroeconomic landscape. But there are a lot of cracks in the system right now. There's a lot of steam being pressured out, and it needs to find a home. And this is why we're Bitcoiners. It's almost like we've are starting to remember why Bitcoin was created in the first place. We're like, oh yeah, it was almost like Bitcoin was created for this exact moment, and yet everyone is ignoring us. So their loss is our gain, all right? Hey, Bitcoin 50% off. We get some cheap coin. It is starting to look like a generational buy moment right now. I'm sure in a year, 2, 3 from now, we're going to be looking back at 60K and being like, I'm so glad that I didn't take my foot off the gas pedal and I continued to buy at that 60K bottom. Confirmed. No, it's not confirmed yet. Because it really, Bitcoin is so undervalued right now in the face of what we're seeing in the macro markets that it's just actually incredible that we're having people legitimately and with a straight face ask the question, is Bitcoin dead? And I have a clip for you guys from CoinDesk. I think it was on, let me see if I have where it was on. It was on CoinDesk. Yeah, it's CoinDesk. I thought it was Bloomberg, but dude, people in our space are asking if Bitcoin is dead. It's actually insane right now, guys. So, hey, we're not out of the woods yet. There's still a lot of pain, but the real theme of this is it's not pain in terms of Bitcoin. Like, this has nothing to do with Bitcoin. I would argue that the price action we've seen probably in the last few months, since February, since the start of the war in Iran, all this price action really has nothing to do with Bitcoin per se. Yeah, you could say 4-year cycle, et cetera, but it's really Bitcoin entering the macro landscape right now, and that's what we have been fighting. The macro headwinds is really what's keeping Bitcoin down. And then further, like, no one's buying Bitcoin. No one's using Bitcoin. The mempool is absolutely dead. I don't know if you guys are using it, but like, we have 1 sat fees right now. Like, no one is using Bitcoin. No one is buying Bitcoin. Everyone's either in the ETFs or they're chasing AI stocks or the SpaceX IPO. We are just completely forgotten at this point. But at that same token, the fact that we are holding up where we are right now, I think that is a bullish indicator of where we currently are. And I'll expand a little more on that later. But anyways, let's keep the show moving. So I have a clip, as I said, from CoinDesk. And then we got some interesting news coming out of the U.S. and the Federal Reserve CBDC ban. It looks like they are one step closer to doing a temporary CBDC ban here. So slightly hopeful. But I'm sure me and Chris will unpack this and be like, well, they don't really need a CBDC because of other factors. So, and then again, to wrap up the show, I haven't talked to Chris in a while, so I'm going to do a little vibe check of where he thinks the cycle is and where we maybe have bottom. So, quick commercial break. I'll be right back, and we will continue on the show. Here's the part that nobody says out loud. Buying Bitcoin on an exchange and leaving it there isn't buying Bitcoin. It's buying an IOU. And the last decade has been a masterclass in what happens when those exchanges don't deliver on their promises.
Bitcoin Well is a self-custody Bitcoin platform. That means that when you buy Bitcoin, it goes straight to your self-custody Bitcoin wallet. You actually own it from the very first transaction. They're available both in the United States and Canada. Pricing is transparent, straightforward, and no nonsense. And if you're buying a larger amount of Bitcoin, Bitcoin Well Infinite gives you concierge-level support through a dedicated executive Bitcoin advisor, premium help for when it actually matters.
You can also stack a little extra through the referral and wishing well rewards. A nice bonus on top of the owning your own Bitcoin thing. So go to bitcoinwell.com/simply and sign up for the Bitcoin Well portal today and buy Bitcoin you actually own. Paper burns, paper floods, paper fades. If your seed phrase is written on paper, it's not really backed up. It's waiting to disappear. Stampseed's DIY kit lets you hammer your seed words directly into commercial grade titanium. Fireproof, crush-proof, waterproof, and permanent. Once your words are in the metal, they aren't going anywhere. Use code SIMPLY at stampseed.com for 15% off anything in the store. That's stampseed.com, code SIMPLY. Sorry. I'm chatting with the Rumble. I'm getting roasted today. All right, guys, it's Tuesday. I'm getting roasted. It's okay. Anyways, the current Bitcoin price is $62,430, a 50.5%, 50.5% discount from all-time high. We are holding on to that $1.25 trillion market cap, and the block height, the only time that really matters, the only real time on planet Earth is 955,032. I repeat, 955,032. So, Chris, I'm getting super roasted in the chat right now, but hey, it is what it is. It's Monday. It's a Monday. Actually, there's a funny comment in here before I play the clip. Who was it? Interbellum. He's like, lol, Chris is watching the show with us. One of us. He's just watching the show on the back end. He needs to see himself on a 30-second delay to be like, yeah, I was spitting bars. Anyways, I got a pretty good clip here. Again, it's from CoinDesk. Wow, what's going on? Oh, here we go. And it's from Rick Edelman. Remember Rick Edelman? He kind of came on the scene last year, basically being one of the first very public financial advisors, basically saying, look, I think people should be allocating at least 5% to their Bitcoin portfolio. as Bitcoiners, we all latch onto that news and we're like, finally, someone has confirmed our thesis. Here is his recent take on where we currently are in this cycle and what he expects happening towards the end of this year. So let's watch this, and then Chris and I will chat about it.
Being done by the biggest names on Wall Street, including State Street and Invesco, and even Fidelity getting involved in all of this. At the same time, institutional investors are jumping into crypto in ways we have never seen before. 95% of the institutions that don't own crypto say they're going to allocate this year for the first time. And 3/4 of those who are already allocated say that they're going to increase their allocations. We see at the same time SpaceX and the AI IPOs draining attention away from crypto over to the shiny new thing. But is that going to be sustainable? So it's definitely a two-edged, double-sided coin. And what we're recognizing is people are not making the connection yet between what's really going on in crypto compared to what's happening with crypto prices.
A few things I want to follow up on there. First is, when does price catch up with all of this building that we're talking about?
That's the magic question, isn't it? A lot of folks are looking at the Clarity Act as the key pivot point. If this gets passed into law, that will largely be seen by many as the bottom. That this is all we needed to get the institutional marketplace, TradFi, fully engaged, because the rules of the road will be clear. If the bill fails or is delayed, then chances are you're going to see a negative reaction in the short term as people are disappointed in the loss of momentum.
Okay, so I do have a Clarity Act update for you guys. Nothing really substantial yet, but Congress has finally scheduled the hearing for the Clarity Act, and it is July 17th. So, in fact, it looks as if that July 4th date for the Clarity Act passing or hearing is not going to be hit. It's not going to go through July 4th on the 250th birthday of America, which is kind of what I've been telling you guys for a while, that July 4th date was very hopeful. So we'll see what happens in about 3 weeks time, or 20 days, 21 days till the Clarity Act passes. Let's see if the meme holds out. But anyways, so Clarity Act update, July 17th. Obviously, everyone has been saying that once the Clarity Act passes, that's going to mark the bottom. That's when capital is going to finally start to get allocated to Bitcoin. At this point, I'm like, dude, it's never going to happen, okay? Like, it's just not going to happen. So let's just get that behind us. Let's just not even, get the hopium going that the Clarity Act is going to bring more capital. And it really does bring me full circle into what Rick Edelman was saying in that clip, where the Clarity Act now has become literally the exact duplicate of the institutions are coming that we've been saying for years and years and years. Everyone thought when the institutions were going to enter Bitcoin, which we can in fact say is now, that they would bring, in fact, more capital and number would go up. The more derogatory, cynical view of this was, hey, we thought the boomers were going to pump our bags. It has, in fact, not happened yet. And now we're all waiting until July 17th to hopefully get the boomers to save us. Boomers, we love you if you buy our bags. If not, I will continue to talk shit, at least if you're not a Bitcoin boomer. But it does seem, and obviously from the data that I've seen, from the reports that I've seen, it does look as if the institutions are on the back end and via various polls saying that they are going to allocate more capital to Bitcoin. The ones that have allocated capital are going to increase their exposure. But really, it's starting to make me feel, and Chris, you've been around probably just as long as I have, that this feels like the 2020, 2021, FTX blow up moment where, like, guys, the institutions are going to save us from this bear market, and it never happened. And even when they do come in, it's just like, why isn't it moving the market? But one other tidbit before I pass it to Chris, did you guys see the lower third there on the show is like, is crypto dead? It's crazy to me that we are talking about Bitcoin dying right now. I'm like, how are people asking this? I think Bitcoin's never been stronger. We've never had more interest in Bitcoin. We've never had more mainstream appeal. And everyone's looking at a 50% decline. Like the literal mellowest bear market ever, at least so far. There's still some time for me to be wrong on that point. and we're like, Bitcoin's dead. It's over. Like, wrap it up. You know, when should I just sell my coins and go chase the AI bubble? Because this is boring. I'm tired, boss. Something please happen. I'm losing my mind over here, Chris. But anyways, what's your thoughts on Rick's take this morning on CoinDesk?
The first thing I noted was when he said retail getting into crypto ways we have never seen before. That's just code language for they're taking on way more leverage than we've ever seen before. No, I think it's interesting. I think, you know, I think a lot of the suit coiners, as we can call them, are like, we need the clarity to act to pass, and then regulatory bodies and, you know, institutions can come in. I'm of the camp, like most Bitcoiners, or at least the hardcore Bitcoiners, that we don't need the institutions. It doesn't need the Clarity Act to pass to succeed. I think you get Bitcoin at the price you deserve. I know some people say that's very mean and selfish. And, you know, how can you say that you've been in Bitcoin? Me and you, Opti, have been in Bitcoin much longer than them. That's not fair. You guys held on. Well, when we're going through the doldrums of the bear markets, that's what we could say. It was not easy. We didn't just buy it and willy-nilly. We had to go through the ups and the downs and the downs and the downs, and then the sideways chop, and then finally back up again. So I don't know. I think, you know, I worry that the Clarity Act is going to be like basically the industry building its own cage around it. And I say that because I think there's always competing interests in anything. Obviously, you have the regulators, you have the banks, you have the crypto industry, you have the Bitcoiners, you have obviously the president and his administration. So like there's like and those are just some of the of basically the stakeholders, and all of them want different things for different reasons. Like the crypto industry wants us to pass to basically give a check mark on the shitcoin casino, where like the Bitcoiners are like, hey, like there's some things that are like going against privacy, and like, yeah, you can throw people in jail for just wanting to be private with their transactions, or hey, this doesn't really give much clarity around developers that do stuff inside the US. So like, I think I know Odell and Marty, so Matt Odell and Marty Bent have been kind of hammering the drum. They're like, if it's going to be like this mishmash of stuff and it's more of a win for the crypto industry, just don't pass it at all. I kind of agree with that logic. It kind of makes sense. Like, we don't need clarity. If you want clarity, you download the white paper and you start a node, and that's like as much clarity as you need, and start interacting with the Bitcoin network by buying Bitcoin and take it into self-custody. Maybe that's just the hardcore Bitcoiner in me, but I do worry that if the Clarity Act passes, it's going to be like a carrot and a stick. Like, hey, they're using the carrot to be like, if the Clarity Act passes, all these institutions are going to come in. But the back end of that is the stick of them being like, oh, by the way, we can throw any developer in jail for any reason whatsoever. Yeah. Oh, you want to use Bitcoin privately? Yeah, we're going to assume you're money laundering, you're avoiding taxes, and you're committing crime. So we're going to throw you in jail. So I worry, like, I really do worry, like, yeah, the Clarity Act, but it's like any of these acts. When you get these omnibus bills, maybe it's not an omnibus bill with like spending, but like the Clarity Act's probably going to be like 4,000 pages. No one's going to read through every line. There's going to be a line on there on like page 2,000 that says, oh, by the way, we can do whatever we want to anyone in the crypto industry whenever we want for whatever reason. And that's just what I kind of caution people. And I know it's been like, what, this is like a 2, 3, 4 year kind of long thing with people saying like, we need the Clarity Act, kind of on the tail end of Trump leaving office, Biden coming in office, and then now him coming back in. Like, they're always saying we want regulations. But whenever you hear people saying they want regulations, that's literally just like the crypto industry or the larger institutions at large. They just want moats, so that way people can't encroach on what they want. So I worry about that. And I worry about basically us building a cage around ourselves. And yeah, maybe it's the crypto industry trying to get the check mark for themselves, like I've said earlier, but I just worry it's like a carrot and a stick. So if it doesn't pass, I'm not going to lose sleep over it personally, but that's just my 2 cents.
Yeah, no, Chris, I think that's the best way to view this. It really does feel like I keep using the George Bush, fool me once, can't fool me again meme, like I'm starting to get PTSD in that same idea. We've heard this so many times before, whether it was the ETF or, now we're hearing it with the Clarity Act. It's like, guys, it seems like the same people that are saying it, usually they're the Coinbases of the world. They're the shitcoin adjacent people. And they're like, guys, trust us. Once this goes through, like, your bags are going to get pumped. And I've been on the fence. Actually, I haven't even been on the fence. I've been on the side of, Yeah, I don't know if this is actually going to be good for us. It really does feel like we are building ourselves that gilded cage. It does feel like we are trapping ourselves here for this fabled number go up and institutional capital is going to come into Bitcoin. Like, trust us, bro. This time for real, though. This time the capital is really going to come. And I'm like, yeah, I don't know. I kind of heard that in 2024, though arguably we could say that the ETFs and the Bitcoin treasury companies, they bought what, 120 billion plus of Bitcoin. Arguably, we could say that they're the reason why we are holding up at the price we currently are. So maybe it is one of these views that the institutional capital that is trying to find its way into Bitcoin isn't necessarily going to pump us to new all-time highs. Though Saylor did say, without the ETF, we wouldn't have gotten to 100K. It does seem like they are raising the floor a little bit. So maybe we could attribute that to this is why the price hasn't dropped that much. But it does feel like what you're saying. It does feel like we are getting, hoodwinked here. It does feel like, guys, trust us, when this passes, your bags will be packed. And then we're going to go through the process and then it's going to dump. Clarity Act's going to pass and the price is going to dump. And we're all going to be like, wait, did we just shoot ourselves in the foot again? Bitcoiners just keep shooting ourselves in the foot over and over and over again. And I'm pretty worried about this being the same case. So I'm on the, no bill is probably better than a bad bill. And from what I've seen with the Clarity Act, it does seem like a bad bill. But hey, I guess everyone, with the real deep pockets are waiting for the Clarity Act, or at least, quote, waiting for the Clarity Act. But yeah, it does feel like a moat. It seems like a shitcoin moat. I think Marty and Matt, I was saying it before Marty and Matt, FYI, but Matt Odell really went out on a limb and he's like, yo, just kill it. Let's not talk about the Clarity Act anymore, but everyone's talking about it. We're all waiting for it, I guess. Chris knows pain. He's a Jets fan.
It's true.
Oh man, that's funny. Yeah. Well, as we know, actually, side bit here, Chris, you haven't been on the show for a little bit, but they were crashing out on me yesterday. The chat was losing their mind at me, and hey, I'm just an ape man. I still get PTSD here, and I think it was Intrabelden. I always forget how to say your name. Intrabelden. He's like, Opti, the chat's crashing out. Peak bear market signal here. So I think it's just bear market things. Everyone's crashing out because of the bear market. But hey, we'll survive. Just keep stacking. We've been through this before. For you newer guys, as we always say, welcome to the cost of tuition. Trust us when we tell you it's been worse. This is easy. The sentiment is horrible, but as long as you keep stacking through this process, through this bear market, you will help the newer guys at the next cycle. At the next cycle bottom, you will be like, hey, remember, guys, we've done this before. We'll be okay. All right, anyways, let's talk about this CBDC ban. CBDC ban in scare quotes. So I'll be right back.
I want to give a shout out to our partner, Ledin. Here's something most Bitcoin holders never figure out until it's too late. You're sitting on wealth you can't touch without selling. Ledin fixes that. Bitcoin-backed loans. You keep your stack, you get cash. And they just introduced their lowest rates ever. No complexity, no fine print. The larger the loan, the lower the rate. These new rates apply to all new loans, refinances, and renewals. You'll see all the rates up front before you apply. The new, lower rates come with Ledin's gold standard protection. Your Bitcoin remains custodied and is never lent out for interest. Perfect 8-year track record of keeping clients' assets safe. Auto top-ups, LTV alerts, and partial repayments to keep you in control. Repay whenever you want with zero penalties or monthly payments. Ledin's perfect $10 billion track record through every market cycle in the last 8 years speaks for itself. Don't choose between a great rate and the safety of your Bitcoin. Get both at Ledin. If you ever thought, what happens to my Bitcoin if something happens to me? Or what happens if I lose my phone? You're not alone. For a lot of people, the biggest barrier to self-custody isn't buying Bitcoin. It's the fear of making a mistake. And that's why I like Bitkey and I recommend it to my friends and family. Bitkey is a Bitcoin wallet built for real life, not just for day one, but for everything that happens in between. Lost devices, upgrades, accidents, and long-term ownership. There's no seed phrase to write down and worry about losing, and no single point of failure that can lock you out of your Bitcoin forever. What really stands out about Bitkey is the peace of mind. Recovery is built in, inheritance is built in. It's a complete self-custody system built by the team behind Square and Cash App, designed to make holding your own Bitcoin simpler and safer. Take self-custody of your Bitcoin today using Bitkey. Go to bitkey.world and use promo code SIMPLY for 10% off your new Bitkey. That's bitkey.world, promo code SIMPLY.
All right, guys, hold on. Dude, I love stopping the show so that I can just chat, hit the chat. All right, hold on. NGU happens after AGU. Yeah, AGU happens after NGU, bro. All right. That's the real signal no one really wants to acknowledge. Anyways, this morning we got a tweet from Bitcoin Mag saying the U.S. Senate passes bill that banned the Federal Reserve from issuing a CBDC until 2030. So let's look into this. It is, does it say here? No, but here's the highlighted part. Prohibition, except as provided in subsection C, weird provision. The Board of Governors of the Federal Reserve System or a Federal Reserve Bank may not issue or create a central bank digital currency or any digital asset that is substantially similar to a central bank digital currency directly or indirectly through a financial institution or other intermediary. Now, to update you on this, apparently this bill, it just passed the Senate. It is bipartisan, passed last night. It's expected to pass very quickly in the House and be signed by President Donald Trump. So after years of, quote, trying to stop a CBDC ban, it looks like we are basically on the eve of that happening. Now, there is some caveats to this. It is only a CBDC ban up until 2030, which might be telling you a lot about what they're trying to do later on. But as of now, it seems that the Senate passed the bill that is going to, in fact, ban a CBDC coming out of the Fed. Again, only for a couple of years. So temporary ban on the CBDC from the Fed. Who knows what's happening in 2030 and beyond? But as of now, I guess we could take a small W, though I'm pretty sure Chris and I will elaborate on the idea that they really don't even need a CBDC. But hey, I'm getting ahead of myself. So on Yahoo, we have U.S. Senate passes housing bill with 4-year Fed CBDC ban. The U.S. Senate on Monday night passed the 21st Century Road to Housing Act in an 85-5 vote, a bipartisan package meant to boost housing supply and stop large investors from snapping up single-family homes. You know, we were just talking about huge omnibus bills, and now a housing bill has a CBDC bill packed into it. Tucked away in the bill is a provision that would bar the Federal Reserve from issuing a CBDC through the end of 2030. The measure says, of course, I just read it, that they can't create a CBDC. Even after the ban lapses in 2030, though, the central bank would need explicit authorization from Congress to pursue a digital dollar. Language carves out private stablecoins, exempting any dollar-denominated currency that is open, permissionless, and private, and leaving issuers like Circle and Tether, now governed by last year's Genius Act, untouched. So that, I think, is the signal here. I think publicly we can say that this is a W. It sounds good. You know, no CBDC coming out of the Fed. At least they can get the headline that, hey, we will not have a central bank digital currency. But I think that last sentence was really, the signal there. It's like, look, I don't necessarily dislike stable coins. I see that a lot of people are using them. A lot of people want dollar pegged digital currency. Stablecoins have been able to propagate into areas that the dollar wasn't able to. And that's where it's like, yeah, you don't really need a CBDC if you are using a centralized dollar pegged stablecoin. And this isn't to really, talk smack about any stablecoin in particular, but you don't really need a CBDC if you are using a stablecoin. We've seen what happens when people that the government doesn't like uses a stablecoin. They just shut you off. Like, what is the difference? It's just a branding thing here. But again, PR wise, CBDC is not going to happen, at least officially in the US. But again, the public sector doesn't need to do anything when the private sector is basically doing the same thing. And if we've seen anything happen that is a good corollary to this, I think Argentina might be a good example of this. We've seen that Malay's, federal government, the public sector says all of this stuff, but they're really just moving everything into the private sector, and they're just having, private companies do the things that the government wants, and then they get the contracts for the government. So we are definitely in, a technocracy here, where like the federal public government doesn't have to do anything when it's a private sector that does all of it for the government. Everyone knows Palantir stuff. Everyone's afraid of the big boogeyman that is Palantir. We're kind of, I think, seeing a similar scenario play out here in terms of the CBDC. But hey, the Trump administration, Congress, and Senate, they get a W by saying they're going to ban a CBDC at least up until 2030. So I guess it's a W. Another bill, I guess, ink on paper is going to stop something that probably won't even be able to stop. But hey, Pete Clown World. So anyways, Chris, are you as cynical about this as I am? I guess it's a W, yeah. Oh, no CBDC. That means people are going to use Bitcoin. It's like, no CBDC means people will probably just use stablecoins. But hey,
yeah,
it's a rough road.
No, so yeah, I guess to your point, I've sent you an article. If you can actually pull this up, Opti, it's the one from The Block. It was talking about, so I guess I'll tie this in. I'll start. Yes, it's a W, quote unquote, but wow, it's only 4 years and it's not indefinitely. So it's like, what are you saying? Like, if a new administration in 2028, it's not going to be Trump. So if a new administration comes in, whether it's Republicans or Democrats win, they basically, through the middle of their term, have the ability to issue a CBDC. So that's not great. Like, yeah, I guess we're buying ourselves 4 years time. But then, Opti, if you want to pull up the article, this was from Tether in back of 2023, December of 2023. So Opti, I know for a fact we talked about this on the show back then. They're like, Tether's like, hey guys, we're good. We can use this. But hey, by the way, we onboarded the FBI and the Secret Service. And also, by the way, it's literally as soon as you scroll down in this article, it should be the first line. By the way, we also froze $435 million in assets this week. So it's like, yeah, you don't want a CBDC, but this is a private company and we can freeze things at will. So obviously, it kind of seems there's two factions. So Tether was founded in the British Virgin Islands. They then since relocated in 2025 to El Salvador. To call them, I hate to call them like kind of like the Wild West or the Cowboys, but they basically kind of founded or domiciled outside of the US. And the US does not like when companies succeed and they don't have their arm around them or their authority around them. Then obviously they're a circle with USDC, which no one uses. I have literally, Opti, I will give, honestly, I should make a thing. I'll give you $20 in Bitcoin if you can find me someone that's actually used USDC. And then you can see it.
Wait. Before this post, though.
Yeah,
it's got to be timestamped before.
It's got to be before.
You
can't just start using it now. But yeah, like if you have a friend, the first person to come to me, I'll give them $20 in Bitcoin and I'll send that. That's legit. That's timestamped. It's got to be before I mentioned it on this, though. But I have never found anyone that's used USDC or Circle is a provider of that. USDC is interesting because they were founded in the US and they're like, please regulators, regulate us. Like we'll be the good boys. And by the good boys is anyone you want and we will throw them in jail. We'll freeze their accounts. We want to be regulated and we want to follow by your rules. Where Tether basically grew outside of the United States and the US doesn't like that. But by far, of all the stable coins, it is by far and away the most successful. They have a very small team. I think they have less than 100 people. They're more profitable than BlackRock, for perspective. Like, they're just printing money there. I'm not here to say one way or the other whether it's good or bad or indifferent. I don't use Tether. I would advocate that you shouldn't use it yourself. I understand where people in South America, Central America, places in Europe and Asia that have to use it to transact in US dollars that may be sanctioned from it. But that's just not here nor there. But to Opti's point, so yes, we're not getting a CBDC for 4 years, but that means that the next administration or the administration after that, or 10 years, 20 years, they can still do CBDCs down the line. But with that said, it's kind of the carrot or the stick, oh yeah, like you can't use CBDCs now, or like, we're not going to do them, but use these private companies that, oh, by the way, the FBI and the NSA and the CIA and the Secret Service are all onboarded to our platform. And by the way, we just also froze assets because they told us to. So this is why we advocate for Bitcoin. This is why we advocate for buying Bitcoin. This is why we advocate for self-custodying your Bitcoin. This is why we advocate for running a node. I know it sounds difficult, but it is not. It is. It may be overwhelming at first, but I know Odell always says this quote. He's like, if you can raise a kid, if you can drive a car, if you can graduate from high school, you can definitely buy Bitcoin, self-custody it, and protect it yourself. So there is responsibility that comes with that, but we have the utmost confidence in our fans that you can do this, and that is why you should not use any of these CBDCs. This is why you should not use any of these stable coins, or they basically are CBDCs.
Yeah, and one little fun fact about USDC, or the Circle stablecoin, is that it's basically Coinbase's stablecoin. And who is the biggest advocate for the Genius Act and the Clarity Act is in fact Coinbase, which really goes back to what Chris was saying about, it does seem as if shitcoins are trying to build this regulatory moat, get the pat on the back by the US government so that they can maintain their profits and their business model. But with all that being said, look, I'm a Bitcoiner. I think it's super easy to use Bitcoin. Maybe I do have the, financial privilege as, wow, I'm blanking on Gladstein's first name here.
Alex Gladstein.
Alex Gladstein. Maybe I need to check my financial privilege because I use dollars. I want something outside of the dollar system, but there's a lot of people that would much rather move towards a dollar-like system. And hence why they are using stablecoins, because they, in fact, can't get dollars. But hopefully, maybe it's a slow roll here, but we get enough people using Bitcoin and moving away from the stablecoin phenomenon that has, for better or worse, actually taken off. Honestly, I need to look this up. And I don't know if you know the numbers, Chris, but it does almost seem as if stablecoins have more adoption than Bitcoin right now. Like, I don't know if there's official numbers to this. I feel like Bitcoin is probably more, but it does feel like it has like a bigger adoption, or it grew more in the last couple of years than Bitcoin has globally. I don't know if I have the numbers to back me up on this, but my hunch is telling me that that's the case.
I don't know off the top of my head. I think it's like 600 billion or something like that, which is, I guess, still technically half of where Bitcoin is price wise. But still, I mean, it has grown faster than Bitcoin has over the last 4 or 5 years, with the stagnation and price going up and then crashing back down. So I do think people are getting funneled into that. And I worry that it's kind of I don't want to say they're being tricked. It's like the US dollar is much better than their local currency. But like, as we say, the fiat currencies are not what you want to compare against. So it's like, if you're in Argentina and they've had 5 hyperinflation events in the last 30 years, the US dollar is king there. It's supreme. Yeah. And it's like, if I have a digital dollar because I don't have access to Venmo or Zelle or any of the US banks, like, this is way better. But like, it's kind of, you're getting trapped into the crypto and the stablecoin thing when you should really be going higher than that and going into Bitcoin. And like I said, to your point, we need to check our financial privilege because we're Americans. But like, it's almost like best case scenario or worst case scenario, you should have a little bit of spending money on Tether or USDC. And like I said, we're not advocating to use this, but then as much as you can put into Bitcoin, you're in a much, much better spot. So like, the little bit of cash or, fund money or whatever, the money to pay
digital
bills,
dollars,
the digital dollars you have in your stable coin, then the rest should go into Bitcoin. And that it would be like probably the ideal saving plan. Just kind of like us Americans that like, hey, you have a little bit of cash or use a credit card to pay your bills and do different things like that, pay it off at the end of the month, and then sweep the rest of it into Bitcoin. It's kind of the same thing that we're saying here.
Yeah. I mean, one of the things that I know I forget all the time is that other countries outside of the US don't have like a Cash App or like a Zelle or, you know, all Venmo and PayPal and all that stuff. Or further, they might have their own, but they're not in our system per se. And it's just so like, I think everyone is familiar with just like, oh yeah, you know, hey, just PayPal me later, bro, or, you know, just Cash App me, dude. And we forget that they're not in every jurisdiction here. And I have one of my friends, I actually just hung out with him recently, and he lives in Argentina. And I forget what app he uses, but it's basically like a PayPal Cash App kind of equivalent. And obviously they're not interoperable. Like I can't send him money from Cash App to his, I forget what it is. It's like, it starts with a W or something like that. And I mean, so there is a use case for the stablecoin digital dollar, you know, phenomenon in between these different countries. Obviously, I would say that Bitcoin's use case in that is probably better, but we do forget that not every country around the world has a PayPal like app out there. And so there is a use case for these stablecoin payment, you know, payment rails, but we're always like, guys, I know you're used to the digital dollar, but can we just like, can we skip this phase and just go straight into Bitcoin? Like, it's not that much more difficult. Like, it's not that different. It's literally the same thing, but I guess there's still a learning curve.
Yeah, and I had one thing. I don't know if it's the Wise app.
I think it might be Wise app.
But
maybe look it up. It might be a different one, but I think it was Wise app.
To your point, Opti, everyone's like, oh, well, like the Bitcoin network can't handle it. It's like, guys, we have the Lightning Network. The Lightning Network's been working great for at least 6 years. And like, that's a way that you can interop between currencies and different things. Like, I really think, you know, we've talked about this before, Opti, but like Bitcoin is like building the internet. Like, you know, BTC is the base money. Then you have the Lightning Network. Then you've got, you know, oh my gosh, I'm drawing a blank on some of the other layers of it. But like layer 2, layer 3s that we're building on top of it. It's basically, that's the way that we're building it out. What's this Cali work on? I'm drawing complete blank on it. I should remember this.
Cashew?
Cashew, yes. Like, so you've got like Bitcoin, you've got Lightning, you've got Cashew, you've got Arc, you've got different protocols that are being built on top of it. So yeah, I do think that Bitcoin is superior in that form of using the Lightning Network or any of these other things by comparison to any of these other platforms.
Yeah, well, Chris, you are, I would say, a little more technical than me. So I've been seeing a lot of the ARC stuff, and maybe we're gonna go on a little nerd tangent here. You know, I'm gonna nerd out a little bit. So you know, forgive me, guys. But Chris, have you seen and followed along on the ARC stuff going on? Because I'm like kind of familiar with it, but I really like I haven't done a deep dive yet. I have been pleasantly surprised with the usage of Lightning recently. It's like Lightning is what we said it was going to be, you know, 5-6 years ago. Like, it's gotten to that point, and it really hasn't gotten a lot of coverage lately. But this ARC thing just came up on, you know, my radar, like a month ago. I think it's like finally launched. Are you familiar with it a little more than me, or you're kind of like, it's a thing and I haven't done the deep dive yet?
I haven't done the deep dive, unfortunately. I know I need to get with Alex B. I know he's working at, I think, Arc Labs, and like they're really excited for a lot of things that's grown over there. But it was kind of like, I know the announcement was more like a year ago or a year and a half ago. And then I know it was kind of like, hey, in 2 weeks it's coming, and then it's finally getting here. And I haven't had the chance to really catch up into it. But maybe next time I come, I'll do the deep dive and we can go nerd out with it a little bit more.
Okay. Yeah, I'm down with this. Hold on. Wise World Remit, please come better prepared, guys. I forgot what my friend's app was. I don't think it was Wise. It might be another one. Anyways, whatever. Okay, I guess I got to do a deep dive on ARC as well. I just saw that it launched recently, or it's about to launch. I still don't even know if ARC is live yet, but I've been hearing a lot about it, and it seems very interesting. Anyways, whatever. I'm just showing my ignorance here, and they're going to say, Opti, you need to do better research on certain stuff. Forgive me, guys. All right. Last segment of the day. Me and Chris are just going to vibe check. I do have some charts, and, you know, I think I'm going to get your view, Chris, on where we are in the cycle. You know, I haven't talked to you in a while. We haven't even talked about price in a while. It's more about life. I haven't talked to you. So it's like, hey, what's good, bro? Like, yeah, it's over. Hey, Bitcoin's over. Just like sell it all. You'll be okay. No, I'm trolling. Anyways, I'll be right back.
I want to give a shout out to our partner, HIVE Digital Technologies. Fueled by clean energy across 3 continents, HIVE runs dual engines, Bitcoin mining and AI compute. Their AI platform is ranked #1 in the world for network performance, and it's doing something bigger than compute. It's accelerating human discovery, the science, the breakthroughs, pushing humanity further and faster. Listed on the NASDAQ with the ticker HIVE. Catch the latest buzz at HIVE Digital Tech on X or hivedigitaltech.com.
You secured your Bitcoin, but did you secure your devices too? They're still broadcasting your location and digital footprint. GPS, Wi-Fi, Bluetooth, cell, 5G, EMF, all of it is leaking. Escape Zone fixes that. Their Faraday bags block every signal your device emits, so you decide when you're detectable, not the grid. Built for Bitcoiners who know sovereignty isn't just your wallet. It's your phone, your hardware wallet, your keys, and your entire digital life. Go to escapezone.com/simply and use code SIMPLY for 10% off. That's escapezone.com/simply, code SIMPLY. Okay. All right. So Chris, I'm gonna show some charts. Maybe you and I will chat about, I don't really want to rehash my view on it because I think everyone knows my opinion. I think 60K was the bottom. Obviously hindsight's 2020, but I did see some interesting stuff here. So you guys know I've been following along on Crypto Quant. They've been showing a lot of on-chain metrics. Obviously I confirm my bias here. I only believe the experts if they confirm my bias. So I saw this morning, this chart, STXO from OG Bitcoin holders over 5 years. It looks like the OG selling is starting to slow. It's at its lowest level since late 2024. Today, the 90-day average of Bitcoin spent by these OGs has dropped below 1,000, sitting at 962, its lowest level since November of 2024. So we've been talking about this. There's been a lot of conversations about once the OG selling finally gets exhausted, once there's enough seller exhaustion and there's no more coins to be sold, that's when we will start to see the end of a bear market. Now, updating it, one of my favorite bears who's actually extremely bullish on Bitcoin is, of course, Checkmatey. He just tweeted, late-stage bear markets are defined by apathy, and he has this chart, the long/short-term holder RCAP HODL waves. And he goes, chart note, long-term holders now control 77.9% of Bitcoin's invested capital, or the realized cap. Historically, this metric tends to peak late in bear markets as supply gradually migrates from weaker hands to investors with longer time horizons. So you see here, every time it peaks, it basically marks the bottom, okay? Now, did we mark the bottom? I don't know, but shouts out to the Bitcoin Mag, or rather, shouts out to the Galaxy Mag, because this is something I said, and if you look at this chart, you could read this 2 ways. You could be like, wow, it's so bullish. The other part of me is like, we might have more to go down. But anyways, yesterday they tweeted, Bitcoin is in the strongest ever bear market in history, and you can see here the orange, this 50% decline. You know, we still got it. We still got maybe 3 months left to fully be able, in hindsight, to confirm whether this was in fact the least aggressive decline in a bear market. But I showed this to Luke, I think it was yesterday, and he's like, I don't know, this chart kind of looks like we might have more down, unless it is like this 2011 chart where we already bottomed. So I guess best case scenario is it's just going to kind of go sideways here. Worst case scenario, we might have a little left in the tank to go lower. So that's the, give you the on-chain metrics of, little, I guess, oxygen level reading of where we currently are. Again, I think the 60K was probably the bottom, at least as of now. I'm going to stick to it. But Chris, you haven't been on the show in a minute. Where's your head out? What are you feeling right now? As I told you before the show, Nico in October called 30 to 40K bottom. He keeps saying the same thing, like, we're probably like 70% of the way through the bear market, but he's usually meaning like the price point, saying like, yeah, we probably have like 30% more to go. I think in terms of time, we probably are a lot, or in terms of time, we might be 70% through the bear market. Like we still have, as that chart shows, maybe like another 100+ days until we can be completely convinced that the 60K was the bottom. But in terms of price action, I think we're probably closer to like 90%. My worst case scenario right now is if we do get a final capitulation, maybe in like the low 50s would be where we finally bottom out. But I don't know. So, Chris, you haven't been on the show. Let's just chat about it. What's your vibe check here? What are you feeling? What are you thinking? I know you're not fully in the Bitcoin world as much anymore. You know, a bunch of life stuff going on. So how are you feeling here? What are your thoughts on where we are in the cycle? Or do you even think the cycle has held out?
I think you're both wrong. So
Oh.
my point is, you guys have been in the industry as long or longer than me, so you guys know it's 58K gang all the way through. So 58K is going to be the bottom, and then we're just going to skyrocket up from that. But I'm surprised you and Nico missed that. But I don't know. I'll let that one live. I will say I think sentiment is really bad. I think Bitcoin Twitter, not that I'm on it as much anymore. As you said, I've had a couple life things going on, so I haven't been on it as much. But it just seems like everyone's pissed, everyone's annoyed, and this is the time when like the chart kind of backs it up from Checkmatey, who I love Checkmate. It's when sentiment is worse and people are fighting over nothing and everyone's pissed and nothing's going well. That's the time when Bitcoin catches you off sides and you're like, shit, I should have bought more. So I do think, you know, if you're like me and my family, we've basically, as Bitcoin's price has been going down, I didn't change any of my spending habits. I still, you know, was paying my bills first, and then any excess money I have, I sweep it into Bitcoin. So that's kind of the long-term strategy that me and my family have. Maybe I'm giving away the playbook to getting wealthy and rich, but that's kind of what we've been doing the whole time. Yeah, it sucks. Yeah, you get made fun of at your 4th of July parties or Thanksgiving or Christmas. Your family's like, oh, you told me to buy Bitcoin. It was at 120 something. Now it's down to 64. You're such an idiot, blah, blah, blah. It's like, yeah, well, when you look at it over the course of you investing over this whole long time, it's still done very, very well. And to your point, I think there's a lot of headwinds just overall for all markets. We've talked about it with the Strait of Hormuz. We've talked about the Russia-Ukraine war. We've talked about it with this AI bubble. And just, this is my personal opinion, and this is not financial advice by any means, but I just find it crazy. I'm not a big AI guy. I do think it's like the internet and it'll be important long-term, but I do think that like it is just kind of a way to wash and launder money. Like none of these companies are profitable. And I get it. Like everyone poo-poos Warren Buffett. I learned a lot from him. I know he hates on Bitcoin, him and Charlie Munger. But like, and I'm obviously a Bitcoin guy through and through, but like at the end of the day, when it doesn't have the fundamentals of, you know, not making money, like that's a bad thing. And I get it. Everyone's going to say, well, what about Amazon? What about all these other companies that basically they were taking all of their profits and they were reinvesting in the company? That's completely different than companies that literally lose money and they only make money by raising money or taking out crazy loans with like low interest loans in order to show that we got revenue and we're like, you know, we're net positive. But at the end of the day, like when Anthropic said they were 900 billion and SpaceX right now is worth almost double what the Bitcoin network is. So SpaceX, which I don't want to speak out of my ass here, but I'm almost positive they are not profitable as a company. Yes, Starlink is very profitable and it's very good, but SpaceX as
well, here, Chris, I was going to pull it up. Let me pull that up earlier. So, you know, quick Google search. The SpaceX market cap, depending on the price point, between 2.2 and 2.6 trillion dollars. Their annual revenue generated 18.7 billion in 2025. Annual profits operating at a significant net loss, posting roughly 4.9 billion in the red.
So exactly. So a company is worth twice the amount of the Bitcoin network, almost twice. It's slightly lower right now because of the drawback, but it's worth almost twice the entire Bitcoin network, just one company alone. And I get it, there's Elon, and I'm not one to FUD on him or bet against him. I would say that's unwise. But like, would you rather like me give you the same amount of Bitcoin that you have in SpaceX, or would you rather buy Bitcoin, the hardest network that ever lived, and that is censorship resistant? You know, you can control your own money. It can't be turned off. It can't be censored. Or would you rather buy a SpaceX IPO in your Robinhood account, and basically they can take it at will because you say something against the government. Like, you know, in 4 years' time, when people are saying we don't want CBDCs, it's like, all right, your SpaceX IPO, that's mine. Your Tesla stock, that's mine. Your Amazon stock, that's mine, because we're definitely doing this, and you're dissenting against us. And oh, by the way, the Clarity Act that passed, yeah, there's a line in here that says if you go against the administration's interest, you're actually classified as a domestic terrorist. And by the way, we're going to throw you in jail. And by the way, you're anyone that you've talked to in the Bitcoin and crypto industry, we're going to throw them in jail too for just being friends with you. So I don't know. I don't want to be a doomer. I want to be positive. I think this is like I said, a generational bottom potentially here. I do think sentiment is really bad, and that's normally the best time to get in when you're buying and you're like sick to your stomach because things are so bad, sentiment's so bad. That's normally a good point to get in. So I think the best way to set yourself up for is just set it and forget it. And what I mean by that is just like DCAing, you know, if you get paid every 2 weeks, take a little bit and put it in there. You get paid once a month, you get paid every week, whatever it is, set it and forget it. And trust me, you'll be very wealthy when you're just spending less than you make. And then you're saving the rest in Bitcoin. But anyway, that's just my 2 sats. I don't know if we want to go off anything else there, Opti.
Yeah, no, I mean, I think like that's why I was bringing up the SpaceX stuff, because the valuation is absolutely insane. And when you read those numbers again, you know, their annual profits, significant net loss, it's like, how do we get to these crazy valuations when they're obviously losing a ton of money? And of course, the Amazon example it's probably like the biggest wrench in that argument, because they were unprofitable for a long time and now they're like the most profitable company, like, you know, besides Tether. They're like one of the best companies in the world. So there is a strategy for kind of doing that until things start working in your way. But to come out the gate how we are, it really does go back into the kind of hype cycle that we find ourselves in, whether it's the IPOs, whether it's the AI. You know, everyone has turned into a gambler. And whether this is the bottom or not, like, I would argue that we are closer to the bottom than, you know, to, I think we're just like closer to a bottom than not. And so right now is a good time to be buying. Like right now is a good generational buy. Yes, you know, we would all like 10% more Bitcoin or 20 or 30% more Bitcoin on our buys if it does go any lower, but we never advocate for you guys to just buy one time and forget it. We always do what Chris said. It's like just continuously buy. That process should be a set and forget, but it shouldn't just be a one-time buy and forget. Like no Bitcoiner that has been in the space for a long time is ever really telling you like just buy one time and then don't ever buy again and you're going to be stupid rich. Or like, no, you need to continuously buy Bitcoin. And right now, again, closer to the bottom than not. You should be continuously buying. In 3 years, we're all going to look back and we're going to laugh about 60K or 58K being the bottom and how 58K meme really rules the world. It's going to be what, you know, $580,000 per coin. We're going to be laughing at 58K, and somehow the meme is just going to continue to play out again. But I would agree with you, Chris. I think it is very important to zoom out right now. Like it's the worst sentiment ever. It's really been blowing my mind. Like I'm tired. I've seen the chat crash out on me constantly. Like I could literally, I'm sure if I was better at AI, I could dot plot like the chat sentiment where like everyone was positive and then, you know, something happened. It's just slowly, you know, wait, how do I do it? Wait. You know, it's just going down, you know, the sentiment's going down. And right now, it really is just like peak bear market things where the price is arguably or relatively like horrible, you know, 50% down. But the sentiment is even worse. Everyone is hating on each other. Everyone's crashing out. You know, no one likes each other. We're all grumpy. We haven't drinking enough caffeine. We're just watching our net worth get deteriorated. And it's just like, guys, we've all been here before. And if you haven't been here before, trust the people that have been here before and will tell you, look, it's going to be all right. Just keep buying. You're going to be fine. But hey, bear market is where Bitcoiners are built. So
yeah,
I still love you, Opti. I'm just bummed no Lambo.
We're here for you. We're here for you, Bitcoin.
Well soon. Okay, though. You know, I've told this story before, Chris, but you know, bear markets, we have like two cultural, psychological signals. Usually peak bear market is what we're talking about, is when everyone's fighting each other, like everyone's a liar, everyone's a scammer, you're an idiot, you're trying to ruin Bitcoin, prices in the dumps, it's just sentiment's really bad. The reverse signal is during a bull market when you are pricing your net worth in Lambos and Porsches and watches and, hey, maybe I can buy a yacht here soon. That's usually when you're going to find the top. So we're not there yet, okay? Bitcoin hodl, we're not there yet, but soon. When you look at that, when you go onto the Lambo website and you're like, you know what, actually, I might be able to buy it. Don't do it. The market's going to crash the next day. Oh, man. The activity in the chat is down. Yeah, our views are down. It's really, I think, an overall market sentiment. Everything is down right now. And part of that pressure and stress and just everyone pissed off, that's probably, it's really more like a gut thing. I can bring the on-chain metrics to explain my position, but it's really more of a gut thing. It's really more of an experience thing of just being around for a couple of cycles that it's like, it feels closer to the bottom than a lot of people are, letting on to believe. Like, I don't mean to call him out, but everyone knows Ben Cohen on Twitter. He's like Q4 of this year, like just buckle up. I'm like, yeah, maybe that's when we can confirm without a doubt that the bottom is behind us. But I don't think a wow, that was weird. A Q4 crash is in the books for us now, but sentiment's horrible. Just keep stacking, keep your head down, provide value, get more money. Right now is the time when you should be getting more money at your job and figuring out your Bitcoin security. Make sure your self-custody is airtight. Price it as if your Bitcoin is like 10x what it is today. Then start thinking through your security, or rather your self-custody. But anyways, I'm rambling. It's the end of the show. Chris, it is the best time to stack. It is the best time to stack.
It is the best.
Just want to know when the winning becomes too much. Wait, what was that?
The best time to stack is yesterday. The second best time to stack is today. So I'll just leave you off on that. Stay humble, stack sats. It's been great being with you guys. It's been great hanging out, Opti. It's been a few months, so I'm glad to be back.
I know. It's been a few months. And like I was saying before the show, it's always good having Chris on because I'll ramble with my 42 IQ and Chris can more eloquently explain what I am explaining with his 142 IQ.
Too kind. You're too kind. I'm like 85 IQ. 85 IQ.
Hey, double my IQ. It really makes a difference. Okay. All right, guys. We'll be back tomorrow for another show of Simply Bitcoin Live. Again, don't crash out on me about the timing of the show. I posted at 12:16. But I'm still doing stuff to get this show for you guys up until the unofficial start time, which is usually 12:40 p.m. Eastern time. So I'll catch you tomorrow, guys. Have a good rest of your day. Like always, get outside, get some sun, touch some grass, eat some good food, call your loved ones, get an exercise in. But most importantly, stack some Bitcoin and take it off the exchanges. All right, guys. Catch you tomorrow. Peace out.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.